Good morning, everybody. Today is the 8th day in the month of February 2022. My name is Heritage Apisa, market analyst at HotForex. And quickly, as usual, we'll check through the market, see what the dominant sentiment is, see the opportunities, and then how we can take advantage of it. But please always remember that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is another mixed start to the day like we had yesterday, right? I remember saying yesterday that after the whole volatile moves we had last week from the ECB, from the BOE, from data from the US, NFP as well. For general data, a lot of data releases last week. But we also had a lot of volatile moves. And this morning on Monday, yesterday morning, we had that I call it hangover, more markets just taking a breather. And that has continued into today's session. As much as the calendar remains very light, right? Till maybe the only one major economic data release, which will be US CPI later on Thursday this week. Until we get that, it's very likely the markets remain trading in such an environment, right? I had this written earlier. I said mixed market environment. Markets continue lackluster performance so far this week amid lack of fresh impactful catalysts and light economic data releases. So that has been one of the major reasons why you're seeing such flat moves. You look at equity space, for example, moving mostly flat for now. Yes, even the US 500, yes, even though there's changes as well, but even net changes is really, really almost nothing, right? Currently trading below 500, so that's also important to pay attention to. Generally, the major focus has really been on the bond market. I had written here, I said, rising bond yields have been a major focus for markets so far. This has kept dollar supported, right? Currently one of the leaders of the FX majors, and it has pressured JPY, which is currently lagging amongst the major FX, right? Antipodeans like NZ and AUD are also strong on the day, while CHF is also pressured along with JPY. Oil continues another lackluster performance as well. Yesterday was also very much in a range, and today's session as well, we are also seeing it trading in that range, although still elevated, right? Just a little below or a little off the $90 per barrel level, even as much as some analysts are calling for $100 per barrel level, right? Yes, we cannot really argue with the current, state of the oil market because you look at how supply constraints have still remained and how demand has increased. Obviously, that puts puts a little bit of tailwind under oil prices. But even at this, it's been on solid rally by 8 week consecutive gains or 7 weeks consecutive gains, and that means that we could still see a level of pullbacks, especially trading at this high, especially with the lackluster performance that we're seeing, so far in high beta or high risk, asset classes, leaving out the FX for now. So there's that also pay attention to, right? And in terms of the calendar, is really, really a light one. I mean, nothing, nothing really, really major to look out for on the calendar. Equities, looking at them as well. This is what we're talking about. This is the US 500. Like we said, we've had that continuous, choppy price action heading into today's session. From yesterday, we had a lot of choppy moves, even coming back from Friday, a lot of choppy, and then we had it again on Monday. And now today, we've not even done anything. Little change is nearly zero. Daily change so far is almost nothing so far. And it's also a very similar story across other spaces. This is the NASDAQ, right? Tech as well hasn't done anything so far today. And yesterday as well, we also had, such moves as well play out in yesterday's session. So we could see this lackluster performance continue, and it's something we want to be very attentive about. Because that is also happening, you're also seeing the VIX also trading in a very flat mode, right? Yes, right now we're below 25. I'd like it to see us fall back below 20, which would be a very, very, very good, tailwind, very, very good, reason for upside in equities. So there's that to pay attention to. But for now, as long as we still have such lackluster mixed environment, it's really best to still be patient, wait for something more tangible, to work with. On the US oil side, like I said, we're still trading very much flat, right? Coming from, yesterday's session. if you look at this whole week as well, we've not really done anything, right? Yes, now we are at the bottom of the range, right? Like I said, at these high levels, I mean, nothing says we can't see pullbacks. I remember when the last time we had this range, I remember saying, yes, we had this range, and nothing says we cannot get pullbacks. But after OPEC GMMC meeting as well, we had a jump. I see the upside, despite the agreeing to increase production to 400,000 barrels per day, we still had that jump to the upside. Right now, we're ranging again. I still like oil to the upside, but I really don't want to be buying at such highs. I like to see a pullback, no matter how much we wait for it. I like to see a pullback. Let's see the fib now from where we are trading. A pullback to 23.6 will coincide with this $85 per barrel level, very close to the highs, previous high, swing highs. That's going back to around 11th of October, thereabout. And it could also be interesting if you look back even further, right? You can see what's previous support around here as well. So in as much as I like oil to the upside, I'm not comfortable buying at this high. I like to see some form of pullback, anything deeper, preferably something even deeper, well, towards this lower levels. That will make it more attractive for me. But for now, let's still leave it like that and see how it plays out so far. The dollar index is, relatively strong in today's session. In terms of the moves, though, hasn't been all mind-blowing, but way off higher than yesterday's highs, pushing higher as well in today's session, right? And that has kept the dollar, that also shows the strength in the dollar so far in today's session. Let's just look quickly at, the dollar itself. Now, for the US dollar, the strength in the dollar, first of all, is still very much one I like. Like I mentioned, the Federal Reserve still looking to hike rates. Market participants still looking for faster rate hikes, pricing in as much as 4 rate hikes for the Federal Reserve this year. That also keeps support under the dollar. Now, the way I like to play this one in today's session would be against JPY. I like this because not only because current strength for the dollar is very evident, even the weakness in Japanese yen is also very, very evident because of the rise rising bond yield that we have so far. And I like this because so far we've pushed higher about 0.25% thereabout. We've not gotten to the ATR just yet, just 49 pips. And we still have about 60 to go on for. And now we've pushed higher. We've pulled back towards yesterday's highs as well as Friday's highs. Now, I like this. We could look out for this level as an interesting level for the upside on this pair, as long as bond yields keep pushing higher, as long as the market environment still keeps that support for the dollar so far, right? Because it's a mixed environment, I like to also see how it plays out. I like to still take this, but just being more and super cautious. The overall mixed environment is not giving me so much confidence here, but it's something I still like, something I'm paying attention to as well. Looking for upside on this particular pair from around this region. I would have loved okay, on this particular one, if we would like to look at where we can anchor our risk on this, it's really far off, really. The next swing low that we can see is basically down below this level. But because of the environment, we could just leverage on this previous lows, Asia low, going back to yesterday's session, as well as late American low. Anything back around this region, right, could be helpful for me. Or we could look at that also coincides with just below the 50 moving average, 50 hourly moving average. So I could look at that as one I want to pay attention to. But even with all of that, conviction wise, it's not really the strongest. Mixed environment, naturally, you want to be more patient, but it's something I'm looking at and something that could be interesting going into the day ahead. Euro USD, yes. Now, for this one, after the European Central Bank had that hawkish pivot, had that tilt, right? It's been more encouraging for the euro. We've had the euro jump up from that particular level. I would like to see, pullbacks on this particular one currently, right? I still want to prefer upside for the euro because of the surprise that we had from the ECB, right, compared to likes of the Federal Reserve. We already know they're on the hawkish side already, right? For ECB turning towards more hawkish than they previously are, or let's say less dovish, that makes it more interesting. The only thing is because of the current strength in the dollar right now, and we're expecting pullbacks on this. This could also be one that you want to look out for, but this is really short term, really tricky as well. But something that I'm also finding interesting, I would like to see pullbacks on this one, before looking for further upside here in terms of this pair. But even with that, currently short term biases, it looks good technically. If you look at yesterday's lows as well as Friday's lows. I mean, also coinciding with this S1 pivot point, that's also one that I want to look out for. If we can get a pullback here, and everything aligns, everything remains the same, I could expect something more downside from this particular area. So there's that to watch out for. And it's even good because we have a very good area here. We can anchor our risk on this one. So I have that also on my mind. Apart from these two currency pairs, there really isn't so much to pay attention to in terms of short-term biases. I'm being more patient. US CPI later in the week on Thursday could provide more and more things to pay attention to. But for now, being more patient, prudent is a better way for me to go, right? I'm looking at the calendar like I was talking about is really, really light. I mean, nothing really tangible to hold on to in terms of tier one data. And it really continues even into tomorrow's session as Wednesday and even continues like that until we get US CPI later on Thursday. So it's very possible that we see this lackluster performance continue even into the week. But in all of this, even if you want to take any of these trades, it's a mixed environment, so convictions are a little bit lower, but risk management will still be very key. It's not just about jumping into any trades. It's more about trades that have a higher convictions, and then we can look out for the best trades available. Focus for today's session really be on the dollar, be on the bond market. Yes, there's stories and talk from the geopolitics side, from Russia, from Ukraine, from NATO, as well as the US and UK. We'd like to hear that. Any big deterioration, any big, signal that, invasion might be coming in, sanctions might be coming in, that will be bad for equities and it could strengthen the dollar even more. But at the same time, also strengthen JPY. So there's that to also pay attention to. On the bond side, as long as yields continue to push higher, USD JPY further upside is also another one to pay very much attention to as well. So all of that are in our minds. I'd like to see how the day plays out, and then we'll leave it at that for now. If you have any questions, please always reach out and ask, and we'll always see how we can help answer your questions. Thank you very much. Do enjoy the rest of the trading session. Bye for now.